Hey guys, welcome to Orb Plus. If you watched my previous video, you will have seen that we failed. And I spent the better half of my Tuesday recouping from it. I went to YouTube and I thought a lot about the decisions I made during the video. I looked up something midway through that video that I really was interested. I was curious. I wanted to see, I wanted to know. Because up until this point, I've only ever really read about other strategies. I've never really completely submersed myself into another outside of TJR Trade's um, version of ICT smart money concepts strategies, right? For the better half of the past 4 years, I've been studying TJR Trade stuff, and I've gone through his boot camp like 4 times. I've dialed in my notes. I have taken notes on my mistakes personally. I've recorded these videos, and in each of the descriptions, you could see exactly what I did during the video. I do my best to really describe what happens and why things didn't go the way they did, um, but not to the degree I say in the videos, right? Just to have that element of, oh, so this is the real specific reason, right? Um, I got to thinking, I got to looking, I got to researching, I got to really meditate, really digest the mistakes I made yesterday and appreciate them for what they were. Eye openers and ultimately a lesson. So I went to YouTube. The first, okay, I'm gonna back up. Immediately after I ended that recording, I posted it to YouTube and I stepped away. I had a couple engagements I had to take care of throughout the day, and by the time I got home, it was already 6 p.m. and I couldn't get any editing done for my neutral channel, the Gaming Orb. Um, and I crashed. I stayed asleep all the way till about 4 a.m. today. It's almost 8 now. And I've only really. So, about that strategy earlier, like immediately after I took care of all those stuff for the day, I crashed, woke up, and for the past hour and a half or so, I found a subreddit, I found a thread, I found a post where the original poster of said thread essentially said, hey, I have a decade's worth of experience and I'm going to share my strat with you guys because I think anyone can do this. And ultimately, it's made me a ton of money, and I think it can make somebody else a lot of money. Well, I took it with a grain of salt and with the principle that not one strategy is a one size fits all. So I got to reading, I got to looking, I got to really submersing myself into this guy's strategy. I haven't quite gotten everything perfect, so we're not going to use all of it. We're not going to use most of it. We're not going to use even a little, I don't think, outside of on this chart specifically, on this chart right here, right? The one that you can see my cursor on. This chart specifically, you'll see the two indicators, but we will not be using them on strategy-based stuff, and we will not be using it as a part of TJR trades stuff, okay? Keeping the strategy separate, but through back testing, not back tasting, that's just nasty. Don't taste anyone's backs. But through back testing, we can dial in on two things. One, the legitimacy of my trades, and then two, the mistakes and where I made them along the way. Okay? That being said, let me express something. TJR's trades are through reactions. So, break it down, you have essentially session highs and lows throughout, the most recent high and low outside of session. And then, of course, on the 4 hour, he goes into detail on one of his videos. He's just recently posted like a week and a half ago, something like that. he goes into detail on the 4-hour highs, the 4-hour lows, and essentially where to take profits, where to set key levels at for when they're hit, right? Well, here's what we did. We did the 4-hour high, we did the 4-hour low. Most recent, we have relative equal highs up here. I mean, this is cool. This is cool. But per his strategy, per his thing, when a high or a low is hit, that's a key level. Period. Nothing else. You'll notice in my last video, I was encompassing fair value gaps. I was encompassing breaker blocks. I was encompassing order blocks. I was encompassing breaks of structure. I was encompassing a bunch of different confluences that weren't meant to ever to be used as key levels. He describes his strategy as simple, and that is from a key level hit, a 1 hour, 4 hour, 5-minute high, whatever it is, getting hit, and then looking for that reaction being a break of structure, an inverse fair value gap, or an SMT divergence, if there is one on Forex, right? From that reaction, he then waits for a confirmation confluence that, hey, we're continuing in this direction. You might want to start looking for a place to enter, right? And then from that, he looks for that entry based on a break of structure on the 1 minute or a fair value gap on the 1 minute, or again, another continuation confluence on the 5 minute, saying, hey, yeah, we're going to continue on down because this is where we're going, right? So, that being said, we're going to actually take that for what it is. I'm going to watch a video here soon. I'm going to pause this video that we're recording, and I'm going to go to the internet again. I'm going to watch that same video a second time. Like, I'm looking at 8 o'clock. Market opens at 9:30. We have an hour and a half, and that is a 25-ish minute long video. You can go and watch this yourself if you'd like. If you want to wait for this segment to pause, and then pause this video, go to his channel, and find the video I'm talking about. It's like, it was literally 12 days ago today, in 12, 13 days. So it's 7/23. So it was posted on the 12th or the 13th. No, the 11th. The 10th or the 11th. One of the two. Watch his video completely through. He goes through his setup, his logic, his emotional control, the risk and reward, the key levels, the take profits, all of his confluences, all of his strategy into a very, very small microburst video. I'm greatly appreciative of it. I really, really am. He doesn't really go into detail on take profits outside of session highs and, of course, the 4-hour highs and lows. And realistically speaking, I think that's the encompassment of his strategy, is those highs and lows being the final take profits, right? That being the case, at the same time, the thread I'm talking about on Reddit and all of the questions he's posted, answered, I'll give credit. I'll link that same thread down in the description at the end of this video after I get everything like situated, like wrote down, jotted down. Everything's posted the way it needs to be. I'm going to put a link in the description to both the video for TJR and the subreddit, and you can view both of those at any time. I do not have, and nor will I create a thing saying, hey, credit me for this. That's the two of them, right? The subreddit I want to read through because there are a whole lot of people on that thread who have asked this guy, what's the secret sauce of how do you get out of the market? How do you enter the market? And in what circumstance do you choose to walk away for the day? And they really grill this guy, and he has done his best, in my opinion, over the past year and a half of getting to these guys and answering every single question they could think of and boiling down his strategy to a fine tune. This is why I enter here. This is why I exit here. This is why this is a thing. My strategy is so simple. Anybody can do it. And frankly, everyone should be doing it. It's simple enough and consistent enough to not be not posted, not recognized. So, change, but mitigated, and extremely extremely separated and controlled. We are sticking with TJR trades strategy this video with the indicators of the Reddit thread strategy. Okay. And we're using the two in synchronization without using or implementing anything aside from the indicators listed in the Reddit thread. Does that make sense? Is it okay for me to say that? I think it's okay for me to say that. Okay? That's what I'm thinking right now. That's where I'm at. That's what I want to do. So I'm going to do it. Okay? Okay. That out of the way. Welcome to not Tuesday. Wednesday. Welcome to Wednesday. We're at 8 o'clock, 9:30's just around the corner. We got a little bit to go before our market opens. He uses two, just so we're on the same page, Reddit thread indicators that he uses, MACD, and a 10-day simple moving average. That's what he's using here. That's what this green line is. We'll get into this in a later video. If you're interested in reading that thread, link in that description, go to it, read it, and do what you want to do. I've legit been at it for the past hour and a half, just reading all of what he had to post, all of the comments roasting him, and then all of his answers actually distilling all of the mistakes people have found throughout his original post. So the end result is he has a compiled strategy with every little nook and cranny, including the note that 1, no strategy is one size fits all. 2, to mix up strategies in the event because it's not one size fits all and we see ourselves failing at another, it's a strategy we could try. And 3, it takes all of the mistakes he's made over the years and adds on that layer of patience is key over everything else. Patience and modesty to a degree. So, that being the case, right now, we're on the 4-hour. We see we're in an uptrend. This is me using my bias for TJRs stuff, right? We broke structure here. We're in an uptrend here. Cool. On the 4-hour as well for that. The hour. Uptrend on ES. Uptrend on NASDAQ. 30-minute matching about the same. Yeah, recent break of structure, no biggie. 30-minute matches the two. We're going to stick with the hour, just because we're going to stick with the hour. We're going to keep that nice and firmly grasped. We're going to stick with the hour. Right now, without a second thought, I see we're in an uptrend on 2 of the higher time frames. I know we have a mini break of structure on the 30-minute, and that could be a retrace. Price could choose to tank. We have news at 10. We have news at 10. Let's go ahead. Not that. This. We have news at 10 here. Existing home sales. Right now, it's not that big-ish. That's 30,000 difference right there. 0.03. I'm assuming this is million difference right there. And if actual is greater than forecast, is good for currency. So if this is greater than this number, it means price is going to go higher. But if it's red and lower, it'll continue lower. And then this is our history here. The previous is actually the actual from June. It's now July 23rd. Okay? It's a month later. We saw a decrease from May to June. We saw an increase from the forecast of May, or forecast of June, actual of May, to the actual of, from forecast on June to actual of June, was an increase. So, do I think price is going to continue down? No. Do I think this is going to continue down? No, I think it might actually continue higher. We'll see it here soon. We're going to go ahead and get off of that. We have one orange folder today. Shouldn't be super high impact. If it is, okay. We'll roll with it, see what we can do, see what we've got. And I might mitigate what I said earlier about using a little bit outside of the indicators. We might use one other confluence, and the only reason we're using it is to further verify and justify us entering off of a position with the incentive of direction and knowing where market might want to go, right? Because again, I'm going to repeat this. TJR's trade is so simple, essentially. He says it's based off of a key level hit and then the reaction from that. Price is gone here. It's not going to continue higher just because it wants to. It needs something to feed it. Right now, the only thing feeding it going higher at the moment is relative equal highs. This high is not just this. It's also this right here. Market has manipulated this high, retested the zone, and swept past it very, very smallly. Very, very small, okay? Before it can continue higher, though, it's got to retrace down, hit this low, and then from the reaction, we want to see price continuing higher and sweeping out these highs, moving much, much higher. The bias at the moment, is that price is going to go higher. It's relative equal high on the 4 hour, it's relative equal high on the 30-minute right there. This is super freaking close, and the bias, in my opinion, is up just because of those. Okay? Technically, we have that key level hit. We had a break of structure here, and we're looking at that retrace now, pushing even higher. Okay? That's currently what we're looking at. We are not in market open, and I'm restricting myself from trading until after market open. That much is without question where I'm sitting and staying. I'm not moving past this. I am trading this and after, not before. Okay? My current bias is that price is going higher based on two things. One, relative equal highs, and then two, the fact that it not only made relative equal highs, but it also moved past the previous, manipulating it. And so, because the continuation on the 4 hour and the 1 hour saying we're in an uptrend, we should see price moving higher. That's the thought, that's the bias, that's the plan for it to do its thing. Going back to what I said a second ago about using the Reddit threads, indicators, and how I'm going to be using them. His strategy is that he takes trades when price breaks and closes above or below where this green line and where this blue line crosses this orange. So let me make something perfectly clear. The price is the moving of the candle, right? This green line is the moving average. He waits in a downtrend. Let's go ahead and find one. Right here. Right here. He waits for, in this downtrend, for price to break and close above this green line with a confirmation on the MACD. See how this blue line is the way it is? It crosses above the orange. That is one, a confirmation confluence, and two, the move. Okay? Saying price is going to continue higher. Okay? How we're going to use this with TJR trades. Method. TJR is using the key level and then watching for the reaction, as well as the continuation and confirmation of the continuation, to then place a trade for those take profits elsewhere, right? Right now, there's really, honestly, I could zoom all the way out here and do this. You can see nothing over here. There's no high, nothing to mark, like absolute. And you can even see on the MACD here, we had a huge spike here, but price is nowhere to be seen over here. And I've got maybe a little bit more I can scroll back before it just straight up says no. Yeah, this right here. Can't go past this here. So there is no real high for me to mark on the chart outside of this here. And this is like very, very, this is on the 30-minute. this is a very strong confluence that price is going to go higher. Just the fact it's relative equal highs and that it's as high as it can be at the moment. Okay? But that's essentially how we're going to be using it with TJRs thing. We're going to look for that key level hit first. We're going to look for the reaction. Okay? From the reaction, we're going to look at two things. One, we're going to look at the continuation confluences he's got listed. So for value gap, breaker block, order block, or for price to come within the 0.75 extension or equilibrium, right? For it to respect that equilibrium and those continuation confluences, and then continue to move higher through a confirmed confluence on the 1 minute. Okay? That being said, this is going to do two things. The first, and before we do anything else, this is only to be used on the 5 minute. This line here, 5 minute lockdown. Not 1 minute, not 30, not 1 hour, not 4 hour, not daily, not weekly. 5 minute. 5. It stays on the 5 minute and it never moves from the 5 minute. Okay? Can I even change? I want to change that. I want to select this. Can I make this visibility? Yeah. I want not the months, not the weeks, not the days, not the hours, not the seconds. I don't care for the ticks. I'm looking for the 5 minute. I don't know if this really breaks it. Let's see what it does. So if I go to the 30 minute, I can't see it there. If I go to the 1 minute, I can see it there. I can see the 1 minute. Okay, not bad. But the 5 minute, locked down. You can see it. I can see it. We can see it. Okay? This is the visibility down that it's going with. Okay? That being said, only on the 5 minute we'll be using this, and it's the only use in it is finding the crosses, right? So if price in a downtrend breaks above this line, we are looking for the cross to occur, which will happen later. It will happen later on the MACD because it's slower than this line is, right? The confirmation is that cross saying, yes, price is going to continue higher. Again, this indicates where price might go. It's not a guarantee. All strategies have their faults. None of them are one size fits all. Using this, we will confer with TJR's continuation confluence and the continuation confluence and the confirmation confluence. Only after we get the continuation are we moving to the confirmation. And that confirmation is a double down move. We'll see the cross, we'll see the break of structure, and we'll see it continue higher. An exception to this rule. And this is where things get tricky for me because I have yet to read all of the comments, though I have seen messages and replies back from the original poster on the Reddit thread. What happens when something like this right now is occurring? What is happening right now? What's going on? Well, one, you see across here, we move down. This makes sense with this move down. However, right now, two things. One, we have price breaking above here, but you can see that line super far low there, right? It being that far, there's a delay. No biggie right now, okay? Right now, because that is a confirmation we'd be entering on that. According to the strategy on the Reddit thread, we'd be entering on that, right? Because it confirmed it, we'd enter. But, look what it's doing right now. It has zero idea where it wants to go per this lineup of candles. It has no idea where it wants to go. It's indecisive market decisions, right? Very, very indecisive. And so price could cross a second time here and continue down. Do you see the risk in that strategy? It requires and demands that we really look into it, okay? No strategy is one size fits all, and we could easily be losing trades on this. We could. The goal is not to. The goal is to have such a volatile day with volume and movement without the hindrance of any other noise. Strategy or price moving, breaking above the high, or not high, breaking above the line, and then confirming with the MACD and the like, right? We want to see price continue higher. Remember what I said last video about having all of that brain power just derail and fly off into the distance? Yeah, it just did that again. I know what I'm talking about. I understand both strategies to a degree separately, and I know how I'm going to implement part and a very like minuscule, a mouse could eat it part of the Reddit thread strategy and apply it to TJR's thing for better confluence confidence, right? And implementation on those confluences to better enter the trade I'd take for the day. Boom, boom. Good there. Cool. Good. I don't want to move. I don't want to use these on the NASDAQ. I don't want to, because I'm primarily focused on getting good at taking trades on the ES chart. The only reason we're using the NASDAQ is for the S&T divergence, using NASDAQ to further predict where market's going to want to go for the S&P. That's it. That's how we're using the NASDAQ. That's the only way that's working. Currently, the bias is up. Currently, I think it's going to continue higher. Currently, I think we need to wait for one, market open, and two, for one of these two key levels to get hit. Only after one of these two are hit are we going to be looking at the reaction, and from that reaction, every confluence is all the confluences listed as per these notes here, right? All of these confluences. And then, and only after then, will we apply this and the green line on the 5-minute to the final confluence, that being the continuation of this here, or the confirmation of the continuation on the 5-minute. Those are the only two reasons that'll work. Those are the only two reasons this occurs. Okay. I'm going to pause the video now, because I think I've really described all of what's happened. I think I have a solid solution for the mistake I made yesterday on the previous video. So now I'm going to pause this video. I'm going to go look at TJR's video again. I'm going to watch it completely in its entirety again. It's 8:25. Perfect timing. I have an hour to myself-ish. I will be right back. Okay. So we're market open now. Okay. Just so we're on the same page. We are on market open. I just got through watching the video. I just got through marking stuff down. I just got through making a new notes. One moment. Gotta cue up Musica. Boom. Musica's queued up and in my ear now. Let's just look at two things. First off. I think, did I do it on this one? No, I did not do it on the other. So we're going to leave this alone. We're going to go here. We're going to do this. There it is. These are the notes taken from TJR Trades video, the one I was referencing earlier. This is not what he typed up entirely. This has some bits of my own stuff in it, right, for better clarification on basically my understanding of what he was going over in that video. He went through his entire strategy, jotted all of this down, with the exception of course, March 4-hour, 1-hour session, key levels. Note 1 includes all key levels, right? And then this right here, I typed in equilibrium because 75 extension, I'm not entirely sure what that is outside of, I know what an equilibrium is, right? I know if it hits the 0.382, 0.68 something, if it hits this right here, right? If it comes within this range or this range, and respects it, closes, it'll continue higher, right? Realistically speaking, I'll probably be looking for just one of these two, either break of structure or inverse value gap. And essentially, all of this can be used on either the 5 minute or the 1 minute. It can be used either or. And then the continuation confluence can also be found on either the 1 minute or the 5 minute. And then from there, we wait for the closure after that continuation confluence to enter in the direction of reversal. That reversal being identified by one of these three here. After we enter, our exits are where we marked the high time frame draws and liquidity from the 1 hour, 4 hour, and session highs and lows. Okay. Of course, we can't do anything until one of the daily confluences, high time frame draws and liquidity, have been hit, and that is including of session high and the session low. Right now, we're moving down. We're indecisive. We got Dragonfly Doji, and I think this is a long leg doji. No, short-legged doji. We're waiting for price to make up his decision. We're waiting for it to make up its mind as to where it wants to go, and from there, continue in the direction it is wanting to go in, essentially. Outside of that, we have now TJRs stuff on the screen. It closely resembles this right here. It closely resembles this. And for the most part, I mean, this is a better version of this, in my opinion, because it spells it out a little bit more clearly. Without the 75% extension, I really need to add that here and figure out what that means for a reversal confluence, right? I feel like that would be a little bit more helpful than just a breakup structure or an inverse value gap, or because we're using S&P and NASDAQ and not, I assume, Forex. 75% extension. That being the case, we also went to the Reddit thing and pretty much jotted down literally everything he said his strategy was based around. His execution, his entries, his general strategies, including the indicators he uses for his chart, just the two he pretty much went through, as well as some of the answers he gave with some questions that were brought up to him throughout that thread. And essentially, you can see that here. I'm not really going to go over it. I'm going to really, I myself am going to study this a little bit, get into it, and immerse myself, right? But I'm not going to advertise. I'm not going to... I don't know how else to say that. I don't know. I'm not going to full on apply this strategy because I am too focused on making this one work. I am too focused on not wanting to fail this one first. The only thing I've described this and mentioned this earlier, the only thing I'm using from this strategy specifically are the indicators and the general rule of engagement, where the entry, or in my instance, in my case, what I'm using it for, the confluence confirmation on either a long or short can only be guaranteed from a price break above or below the 10-day SMA, right? So when we have price break above, like this right here, I want to do that. When price breaks above this green line here, and we get a confirmation. There we go. We get confirmation break here on the MACD through a cross, this blue line crossing the orange line, and then from here entering on a trade and catching this high, exiting off of the very next confluence where price breaks off. Now, would this be an ideal trade? Not really. We'd, realistically speaking, we would look for the price to reach the highest point it can before ultimately breaking structure past a low. And we would use the confluences there. But again, I'm only using this and this for confluence confirmation, not use in entry on trade. Okay? Okay? That's, I think I've spelled that out pretty clearly now. So, shouldn't be any confusion, shouldn't be any overcomplication happening. Simply put, confluence confirmation. That's it. And it's not even going to be used to its fullest extent. It'll be there as, okay, so this is a thing, and the confluence didn't show up, but this is saying, okay, it's crossed, and we are actually moving higher. Okay. Next confluence. Potentially enter. From there, work our way around. Okay? Okay. Something I also wanted to note. I think, yeah, this one. So the exits are on draws marked on the 4-hour, 1-hour in session key levels, right? I'm going to pause this so I can think. Pardon for the alarm. That is 9:30. We have market open. The exits, as listed by TJR, okay? The exits are on previous draws on liquidity in the direction of the reversal. That part makes sense to me. It makes sense. It does. Put my take profit here if we're in a downtrend or an uptrend and the general trend says it just wants to continue higher. Okay, I get that. Okay? I get it. I have a problem though. I have one very small problem, and it's the same problem for both strategies. Both of them. Okay? In the instance, and this is a consistent instance that I have run into on several occasions that I don't think I've mentioned yet, though I have described in vague detail how annoying it is to see one of these exits get hit, and then immediately after it gets hit, we have a reversal. My problem is identifying before that reversal, because typically it's such a large reversal, I will have lost a substantial amount, right? Not from an initial entry, but from the potential high I would have had, right? How to identify the point, the highest point in which I can leave the market confidently, completely. Because. And I'm seeing this across both now. Both these traders, TJR and this other trader on Reddit, both of them have such a large portfolio, they can partition their trade down to segments and scale their way out until 0 is left floating. Okay? That's both of them using that. Okay? I am not them. My portfolio is this. I'm using a 63-cent investment off of a $20 large account size. I can't scale down off a 0.01 lot. There is no partial close there. I'm already partially entering. You see my dilemma. I have come to terms with my account is so small, it doesn't matter. I should be accepting the take profits and the stop losses I receive as a result of my trade. However, the door is on the other way. It's swung the other way, a complete 180. Either I identify that and leave before it breaks structure, or 2, and here's the swing, I don't know how long to wait because we have relative equal highs here. Relative equal highs. The whole point of this is that we think price is going to go higher. Cool. Okay. From this, where should we put the next take profit? Is it just this that we're literally going to be exiting off of? Is that really how that works? Because I'm looking at these huge moves, right? And it's not FOMO. It's not fear of missing out. It's looking to see where price is going to go and knowing that if I were to take profit here and it continues to soar past it, I'm missing out on all of this profit. Yes, the trade is quality. Yeah. We hit our take profit the way it's set up via this strategy, via this right here. But what about the rest of it? Because again, I can't manipulate, I don't know if I can manipulate the entry point, right? I don't know if I could change that to go up. I know I can move the stop loss around all I want, but the entry point pretty much stays the same, does it not? You can't change that once it's entered. Only after you hit a take profit or stop loss can you leave, unless you manually go in and close the position. And even then, you're either at that peak or you will have just lost that peak. One of the two. And if it continues higher, cool, that works, but I just got my take profit. I just got the one take profit, the one draw I really was going for. I want the big move. How do that? Does that make sense? Do you see my two problems with both of these strategies? Right quick. I recognize that I could put my take profit wherever, and that it's ultimately up to me to leave the market. But a reasonable take profit is better than one that's out in the field with no real direction as to where to go. Because at any point throughout this top, if we break this and hit take profit and just keep going higher, right? Where's my next take profit supposed to go? If there's no point higher than that. Do you see my point there? Do you understand my dilemma? Same story here. We've already discussed this on TradingView. The highs are here. There were relative equal highs. It was just manipulated to go higher. Okay? I just wanted to point that out because that is my current problem. That is a dilemma I've had with this chart, with NASDAQ even, for a while now, and both of them have led me to think the same thing. Except the first take profit and leave. Ignore the big move and miss out. Okay, cool. Is there not a strategy to get that move the way it looks like I could? Yes, it would involve more risk. I understand it would ultimately mean, yeah, major issues in the strategy, major risk to reward issues. But if there's a potential, what, huh? Do you understand? You understand the words that are coming out of my mouth? Not to quote a movie, but does that not make sense? At the moment, market's open. We hit key level here. From here, we scale down to the 5. Let's do the same thing on this, just so we're on the same page. We hit this here. Boom. Cool. No biggie. Market is open. This happened before market open, which I'm surprised this didn't. Oh, no, it did. Okay, so we had break of structure here that occurred. Not a problem. What exactly are we looking for now? Because we got our break of structure, we're looking for that. So you can only view that on the hour. Okay, so on low time frame, continuation in direction of reversal. So either for value gap, breaker block, order block, or equilibrium to get filled. We want this here. We want this from this high down to this low. Here, our break of structure, this reversal sign. needs to be in the direction of it, right? Which means we have to wait for this to close. This will close and potentially leave us a fair value gap. If so, yay. If not, oh well. No biggie. We have to wait patiently because we know this key level was hit. 1 and 2, we need to find our next confluence. That being a break of structure, which we technically already have. We got a break of structure here. This is our low right here, and you can see it closed below it. So that is a valid break of structure, 1. And then 2, we need continuation confluence. We're waiting on that continuation confluence, and that is all I'm waiting on at the moment. In the direction of the reversal. We see it hit this high. Cool. We're looking at this reversal. We want it to continue down. The short is where we're after because the high was manipulated and swept past. That's what this key level being hit meant. We have news coming out at 10 as well. So, news. Let's see what happens. It closed within equilibrium there. We also had a fair value gap right there that just formed. Actually came up and also hit the order block here. I want this candle right here to close. We're going short based on this move here. We want, after looking for a continuation direction reversal for value gap, breaker block, order block, if I'm referring to the last one, it'd be the 1 minute that I'm looking at. For break of structure back down, boom, short, confirm. This, where is my stop loss going to be placed? It's going to be placed roughly here, above this high. Of these highs here, I might take profit. Scale up all the way to the 30 minute, so we got a clear picture. My take profit is going to get set to the bottom of this session low here. This is a pretty steep leap. Pretty steep, not gonna lie. Do I think we could continue lower? Not really. It's a risk to look at these two right here, especially when we've already leapt, and this risk to reward is the way it is. So I'm going to leave it the way it is. I'm literally just, I'm going to keep this the way it is. I'm not going to change that at all. Aside from that, I want to go here because we need to identify that right quick. So we got our break of structure here. Same story, right? No biggie, not a problem. Cool. I'm going to wait for this to continue on. This is going to get put here. I'm going to put this on the 5 minute because that is the way things work there. We have news coming up at 10. This is an early trade. Early trade. Still, though, I mean, we're there. 5 minutes the way it is. We're cool. We hit that key level, and in the direction of the reversal, we took a short. I feel like we did pretty good at identifying those confluences. They were pretty fast. We waited for that fair value gap to present itself before we really did anything. And to double down on that confluence, we went to the 1 minute. The 1 minute essentially said, hey, we're going down via a break of structure off of this previous low here. We see it continuing down, not a problem. 5 minute, boom. You see that there. My stop loss is just above this high here where we hit that equilibrium mark. I'm going to do this right here so you get take profit encompassed as well as all that. We're going to go ahead and move chart that way so you can see all that occurs. That being the case, we're also going to look at this right here because this is further that we can really dial in. We entered in on a short position and we waited for this to close. It came back up into this. We waited on the break of structure that would have happened roughly in here. Yep. We broke structure there. Cool. Fair value gap was presented. Cool. Move up. We broke structure off of a low that after it went up here, it came back down. Price broke below, just so we're on the same page. Just so we're on the same page per the Reddit user, his strat that we were looking at earlier. Let's go to the 5 minute real quick. Price broke below the thing. Price is about to break below the thing. So per TJRs trade, we entered in early, right? Price broke below the green line. Cool, it closed. Cool. We're about to see that occur on the MACD. MACD is about to confirm that, yes, the price is going to continue lower, and this is exactly what we were looking for. And that price is going to bear run. Gold. That's okay. No biggie. That's what we were looking for. 5 minute, same way. We're gonna go back to the 1 minute real quick because I want to see that break of structure occur. I want to see my risk to reward, and I want to know what I'm gonna get from this. Plain and simple. I want to know. Let's see what price is currently doing. Looks like it's just barreling on down. No biggie, not the problem. That's what we want to see. Yeah. We're gonna leave that there. Cool. Put this here. Come on. Come on. Yeah, move up. Cool. That's exactly what we saw here. Let's go to the 1 minute real quick. So we can see that. We got on the 1 minute here, right? We broke structure on this candle here. We had 1, 2, 3, 4, 1 red, 2 green, and then 2 red. That second red broke, and then that left it there. We move to the 5 minute. Boom. We go there. I'll say there's no way we just took profit right then. Yeah, there's no way we did. Okay, cool. So that's a thing. We're gonna put this here. Good. We have 1, 2, 3. We have to wait for 1 red candle, 2 green, and then 1, 2, and then it'll break structure. Was that lower? How low was that? Let's go to 1 minute on this one more time. Because if I could spot that. That broke structure. That was like right in line with that. So we're actually going to move this back up to the 5. Because I now know roughly where to put the entry. We're going to put, because it was right in line with that. This is a short. We put it here. My stop loss is set to roughly here. My take profit is set, I think right there. Let me go to the 30 minute. Get that encompassed. Nope, it's set. No. That's session low. That's Asian session low. So yeah, that's where we're at right now with that. We have a risk to reward of 3, 1 to 3. Not bad. Not good, but not bad. It's okay. It's alright. Cool. Cool. Gonna leave that there. We have our risk to reward set there. Plain and simple. Let's go ahead and go back to this. As you can see, price is actually continuing down the way we were wanting it to, which is gold for us. Let's go to the 1 minute on this because I have one slight concern, one very minuscule slight concern. All the confluences line up from the hour down to the 5 minute, and even on the 1 minute per the break of structure, the move is down. We're in a downtrend. 5 minute and 1 minute, we are in a downtrend. That's established. My concern is 9:50 to 10:10. News hits at 10. You see the concern. Just a smidge of it, right? Because now we've not only hit this, but we've also dipped down past the first take profit level. That would be London session low that we've hit past. Okay? We've gone beyond it. So we're looking now for a potential break of structure problem. And I want to put an indicator on. I'm going to put the MACD. Plain and simple. This allows me to see two things. One, the move, and then two, compared to the strategy before on this one here, it lets me know when they're about to cross. Either this will break structure, and we'll see it on the MACD confirming, hey, we need to leave. or it won't, and we'll see this blue line here continue on down. We want just above the highs for that take profit, so I'm going to move it up just a little because we have a high here that works. I want to be just above these highs because price has potential to come back up, retest this zone, and then fall back down. That's all I'm doing. That's all I'm going to do with the stop loss. It's not getting changed again. It's staying there. I'm not moving it. Take profit staying right where it is. I'm not moving it. Let's see what's happening. News is going to have an effect. I know it is. The question is, how big of an effect and where is it going to have that effect at? Let's go ahead and queue up news. Have it at the ready. Getting quite hot in this room, not going to lie. This is good. It hasn't come out. Nothing's occurred yet. We have actual greater than forecast. Cool. Okay. Okay. Cool. We're going to wait until about 5 minutes before 10 to refresh at 9:55. We'll see that candle form. We'll go to the website, and then we will refresh the page and see what price, what news is going to do. We're on the 1 minute at the moment. I see we are in a downtrend still, and that it's respected everything. I think it's going to continue down. But before we get too far away, we're going to target this low here as a potential reversal. Okay, keep that there so it's not that far of a drop. We have this low here that has yet to hit. Okay, okay. We have this low here it has yet to hit. And this on a higher time frame will be a fair value gap that it will need to come within. If it respects it, it'll go higher. If disrespects it, will go lower. No biggie. We want to see, I imagine that's a 30-minute. Is that a 30-minute fair value gap in that right there? Yep, fair value gap right there. So we're going to take this on the higher time frame, mark that out, get that good. We have 3 levels it could come down to hit. We have this low right here we did not mark because it technically already hit that. And yeah, let's go back to the 1 minute and monitor the situation, because we now have our bonus key levels within this that if it chooses to reverse off of, we can then take that and then exit with it. We have a move up here. We're waiting. We have a high right here. This is our new high. This is our new low. Let's see what NASDAQ's doing right quick. NASDAQ has not broke structure yet. It also created a new high and new low. It was both lower. The low was higher than that. Was the low lower on that? Yes, it was. It was lower. So I think we're going to continue on down. But we need to be careful from this right here, from this point onward, because it could very well reverse. And I'm looking at MACD getting closer and closer. So I imagine in this is what it's targeting. And we need to be looking for a break of structure or an inverse value gap out of this. And that'll be our exit. We have news as well at 10. That's 9:55 that's occurring on. So news could have that big of an impact, but we need to see. If it's greater than forecast, it's good for currency, yes? Greater than forecast, good for currency. Previous was greater than forecast, and one before that was lesser. The majority for the past couple of months was lesser. It's only June that it increased. They were steep drops from that. We have 5 minutes, 6-ish remaining for the actual for today. That's 9:55 almost. 30 seconds till. We have a new low there. No fair value gap as of yet. Outside of that one, it was respected. We see price continuing lower. 9:55, we see price moving lower. I see it targeted these relative lows here. Our high is right there. It hasn't changed. Price came down, opened lower. See what news is doing. 3 minutes, 40 seconds. Let's refresh this page. Good. Gold. Moving lower on the 1 minute. Not bad. Let's see what's happening on the 5. For better clarification, huge move down. Solid red bars all the way. For value gap, move up. Thought it would do something. Didn't know what to do. News is coming out now, and we have a continued move down. Let's go back to the 1 minute and really keep an eye on that. We are within that range to be very careful and mindful of. News hits at 10. We have roughly 3 minutes to go. Let's keep an eye on price as it's doing its thing. My new high is right here. We have a fair value gap on the 1 minute. No inverse, no breaks. Order block. We had a breaker block here. It formed fine. It tried to order block here, filed within breaker block, had a huge range for it to cover. Claimed within order block, sweep of these lows here. We should be seeing price continue lower, assuming this provides us a fair value gap. News will give us a better shot at that confluence. We have 2 minutes till. 2 candles. 2 candles. Let's go. One candle. Go ahead and refresh this. Still 1 minute. Remember what happened yesterday. We had news hit and it was a minute early. It counted for the previous candle. We're making sure that is a constant through this. If that's not the case, then it's fine. We're in the trade. It's a matter of seeing and watching and waiting. If we have an inverse gap or a break of structure that we need to get out of market right then and there. No questions asked. Not even going to try and defend what it might do. We're going to see it as it is. Break of structure says no. We're reversing off of this hit here. Leave. Not even going to play with it. We have 30 seconds until news drops. Let's see what happens. So far it's looking like we're going to have, yeah, we got a fair value gap off of this right here, showing continuance. News. See what's going on here. Refresh. Pending. Waiting for that candle to close. It'll determine it for us. Let's see what's happening. We have a new high right here. We have a new low right here. Fair value gap says continuation lower. We had a gravestone doji that said indecision, but continuance of this downtrend. We have a hit of the third marker here. 18 seconds for that to close. Let's see what news says. Is it good? Lesser. If it's greater than forecast, it's good for currency. If it's lesser, it's bad. Price is moving down. That was news for the day. This is news candle. We have a second for it to close. Closure. Move down. Gold. We have a hit of that and a sweep of that low in particular. I don't know what this was. Was this a low? No, this was the inverse of a fair value gap. We hit that breaker block there. Now we're looking very carefully. Break of structure, inverse fair value gap. What's the reaction off of news? What is it going to be like? If we see a break of structure, a closure above this high, I'm leaving market. Not even going to play. Not going to try it. Done. Poof, gone, pow, out. We have 2 more days to trade this week and 2 more the following. Do we think we can get back all of what we lost, the 37-ish cents? Hopefully. My take profit was set much lower than what it is right now. The thought process is if we can get 10 cents today, that is optimal for recovery off of today. I want to see us in the green next week. Hello, move up. We want to wait for a candle closure. Only after that candle closure will I leave market. We should see price continue lower. If this right here is an order block and the doji is right and this closes, right? This is our breaker block. This right here will be our order block. And if this closes within this, we'll see it move down. That's the thought process. If it breaks structure, we're leaving. I know I've said it 3 times now. I don't care. I'm going to say it another 10. If it breaks structure, we're leaving. If we see that reversal, gone. Out. See ya. We got a closure. It's within, so we're good. See what price does. We have fair value gaps all throughout that. They're being respected. The high retested the same spot. It matched it. It was a little lower by a literal nano hair. Price should continue down. No break of structure. See what happens. We have a new high right here. It's matched this one, relative the same. It's a new high. Do we think price is going to go higher? I think. Only because we have relative equal highs now, right here on the 1 minute. Closure within. No break of structure. Price broke above the 10 SMA. You see right here. NASDAQ even confirms the divergence here. We're moving up, but we're not in an uptrend yet. Price is just in retrace. We have a high. We're looking for it to get closed above to leave. If it does not get closed above, I'm assuming we're still in a downtrend. And then I need to wait until I see that break of structure. I'm not going to settle for less. And again, my take profit is set right there. And from here to here is a leap. It's currently sitting on this top line. That's a leap, to say the least. Let's just go ahead and do this so it's good and visible there. I know that's tiny on y'all's screens. I'm pretty sure I have it zoomed way the flip in on Trading View. I'm going to zoom this in because I don't like it when it's tiny. I like it when I can... Hello. "20 seconds on that candle. We have a high there. Leaving market. We got 9 cents. 8 cents, but still. We recovered 8 pennies. Not gonna complain. I'm gonna be humble with that. We got 8 pennies. That was a successful trade. We did not hit our final take profit, but we managed to catch from the move down. And as we broke structure, we left. No biggie. Not gonna lie. I was hoping for more, but I'm not going to complain. 5 minute. What's 5 minute doing? 5 minute, we have yet to break structure, though we have a doji, which shows indecisiveness, and it's a dragonfly, so we could see price continue higher off of this now downtrend. I'm saying it's safe for us to go ahead and walk away for today. I hope you enjoyed today's video. Let me know what you think down in the comments below. I think we made the right decision by saying this right here is a valid indicator to use. It's not always perfect. It's not always going to save me, but it does help read the chart just a smidge and helps confirm, even through TJRs trading confluences, that these trades can be taken, and I'm happy that we won today's trade. We have a little bit to go. We've got a smidge. I believe I also said I'd show you guys a whiteboard today off of last video. That whiteboard essentially depicts where we're at when it comes to the resulting balance from zero. So let's just go ahead and pull up our handy dandy calculator right quick. We started with $20. That's the maximum size this account has ever been at. It's never gone over, I don't think, once. Yeah, never once has it gone over. If we subtract 19.69 from this, we wind up with negative 31 cents. We are down from zero. If 20 were zero, negative 31 cents. We have 31 cents to recover in now 2 days for this week. Let's go here and here. Let's triple check this so we're on the same page. We have Thursday, which is going to be high impact. We have 1, 2, 3 red folders, 1 orange folder, nada else. 8:31 hits, 9:45 2 of those red folders hit, and then we have 1 more orange folder at 10. Friday we can trade. We have 2 orange folders, not super high, but at the same time still hitting the market. Tuesday we have Jolt's job openings red and then 1 orange. Nothing major. We can do this. Is this okay? So yeah, we can trade this day, no biggie. Wednesday, so realistic, we have 3 days, period. We cannot trade Wednesday because we have non-farm and FOMC on Wednesday. Tuesday we could trade, Thursday we could trade, Friday we can trade. Wish me luck. Honestly. If you liked the video, consider giving a thumbs up. Subscribe if you're new on the comeback. Share with your friends. If you think they enjoy this, share with someone who's more experienced than I am, so they can realistically roast the crap out of me. Because, like, tell them to go to the comment section, because they're open. You can comment on my videos. And roast the ever-living crap out of me for every mistake I have made. All this, see this sea of red down here? Yeah. Roast the crap out of me for this. Depict to me a mistake I made throughout this, and put it in the comments. I am openly allowing insults in my comments, directed at me and only me, okay? For the mistakes I make and the trades I take, okay? Roast me alive. I can accept the force of the internet. Roast me. I dare ya. Thank you so much for watching this video. If you did, you know what to do. I'll see you guys in the next one, and is there anything else? Oh yeah, check out the description for the links to TJR's video that I was mentioning before, the one where I typed up all of this right here, the one where I typed up this, where I got this directly from, right? And the Reddit user for this strategy right here, right? You can literally view each one of these is like a comment. Like the majority of this is a post, but when it gets to like the execution on down, all of this was answers to questions within that same thread, like depicting his experience and the mistakes he made within his own post at the start, right? So you guys should be able to really dial in on all of that. I'm happy with today's trade. I'll see you guys in the next one. Peace out.